Let me guess. You think being a loyal customer to your bank actually saves you money? You figure that sticking with the same insurance company for a decade means they've got your back. You believe that your dedication is being rewarded with better treatment and, of course, better rates. Well, what if I told you that your loyalty is likely costing you thousands of dollars every single year? It's called the loyalty tax, and it's quietly draining your bank account. In the next few minutes, I'm going to pull back the curtain and show you the shocking math that proves how the companies you trust most are often the ones penalizing you for that trust. And more importantly, I'm going to show you exactly how to stop paying it. So what on earth is this loyalty tax? Don't look for it on a government form. This is the silent penalty you pay for staying put. It's the gap between the sweet deal a new customer gets and the price a long-term loyal customer like you is paying. For the very same service, imagine this. You walk into your favorite coffee shop every single day for 5 years. You know the barista's name? They know your order by heart. But one day, you see a sign out front. New customers, 50% off your first coffee. You go inside, pay full price like you always do, and watch a complete stranger get the exact same drink for half of what you just paid. You wouldn't stand for it, right? You'd feel taken for granted, maybe even a little betrayed. That is exactly what's happening with your biggest financial bills. This loyalty tax is most brutal in 3 key areas: banking, insurance, and telecommunications. These industries are built on customer inertia. They know that once they have you, you're probably not going to leave. They bank on the fact that switching is a hassle, so they can stop earning your business and start profiting from your loyalty. This isn't an accident. It's a business model. Companies have huge acquisition budgets to lure in new people with incredible introductory offers. But their retention budgets? Often just a fraction of the size. The result is a system where newbies are showered with the best deals, while loyal customers are left subsidizing those discounts with prices that creep up year after year. You're not being rewarded, you're being harvested. Let's talk numbers, because this is where the friendly facade crumbles. Meet Loyal Larry. Larry's been with the same bank, same insurer, and same phone provider for over 10 years. He pays his bills on time. He thinks he's getting a fair deal. He is not. First, Larry's mortgage. He got a 30-year fixed-rate mortgage a decade ago and hasn't thought about it since. Now, mortgage rates are always shifting, but let's use a hypothetical to see the damage. Say his bank's rate for existing customers has crept up to 7.24%. But if a new customer walks in today, they might be offered a promotional rate closer to 5.87% for the same product. That 1 and a bit percent difference doesn't sound like a disaster, does it? But let's do the math on a $300,000 loan. At Larry's loyal rate of 7.24%, his monthly payment is about $2,044. The new customer, at 5.87%, is paying just $1,773 a month. That's a difference of $271 every single month. Over a year, Larry is paying $3,252 more than the new guy. Over the remaining 20 years of his loan, he's on track to pay over $65,000 extra in interest, all because he didn't shop around. Next, his car insurance. Larry's got a perfect driving record, but his premium inches up at every renewal. This is a classic tactic called price walking. Insurers know that small, gradual increases often fly under the radar. While recent regulations in some places, like the UK, have aimed to curb this, it's still a widespread issue. For years, a UK watchdog found this practice cost 6 million loyal policyholders £1.2 billion. So Larry's initial competitive rate of, say, $1,200 a year could easily become $1,600 after 5 years of these small hikes. That's an extra $400 a year for nothing. Finally, his phone and internet bill. He's on a legacy plan from years ago. When he signed up, 10 gigs of data was a steal. Now, his provider is offering new customers unlimited data for $10 less than what he's currently paying. It's no wonder that some studies show that only around 47% of customers stay with their telecom provider for more than 5 years. That $10 overcharge costs Larry $120 a year. It seems small, but add it all up. Over $3,200 extra for his mortgage, $400 extra for his car insurance, $120 extra for his phone. Based on this example, Larry is paying a loyalty tax of nearly $4,000 every single year. Over a decade, that's $40,000 gone. Money that could have been in his retirement account, his kid's college fund, or used to pay off that mortgage faster. And he's just one guy. Millions are paying this tax without even knowing it exists. You might be thinking, if the savings are that big, why isn't everyone jumping ship all the time? It's us. That's the million-dollar question, and the answer is pure psychology. These companies are masters at exploiting our natural human tendencies. The biggest factor is the status quo bias. We are wired to stick with what we know. The thought of researching new banks or getting insurance quotes sounds exhausting, and the companies, they know this. They've designed the whole system around it. Signing up is a seamless, one-click online dream. But trying to cancel? Suddenly you're navigating a labyrinth of phone menus, waiting on hold for 45 minutes, and talking to a retention specialist whose only job is to make you give up. They also prey on our trust. We want to believe that being a good customer means something. But in these massive industries, it's a transactional relationship, not a personal one. Your bank doesn't care that you've been with them since you opened your first savings account. They care about their profit margins. This is the point where loyalty, a virtue everywhere else, becomes a financial handicap. Your comfort with the familiar is being used against you. They know it, they count on it, and they profit from it every single day. Okay, enough frustration. It's time for the solution. Hearing all this isn't meant to make you angry. It's meant to empower you, because now you know the game. And when you know the rules, you can win. Beating the loyalty tax isn't complicated, but it requires a mental shift. You need to stop thinking like a loyal customer and start thinking like the CEO of You, Inc. Here is your 3-step plan to eliminate the loyalty tax for good. Step 1, the annual audit. Once a year, set aside 1 hour to be your own financial detective. Pull out the statements for the big 3: your mortgage, your insurance, and your telecom bills. Look at what you're actually paying, your interest rate, your premium, your monthly fee. Write it down. This is your baseline. Step 2, go undercover. Now, open an incognito browser window. It's time to become a new customer. Go to your own bank's website and see what mortgage rate they're advertising today. Go to a few insurance comparison sites and get quotes for the exact same coverage. Check your phone provider's site for their latest promo plan. I'm willing to bet that in most cases, you will find a gap between what you're paying and what they're offering a total stranger. That gap is your loyalty tax. Put a number on it. See it in black and white. Step 3, make the call. This is the moment of truth. You are now armed with data. You're not calling to complain. You're calling to negotiate. Here's your script. It's simple and shockingly effective. Hello, I've been a customer for number years. My current mortgage insurance phone plan is at your rate. I've just seen that you are offering new customers a rate of new lower rate for the exact same service. I'd like to stay with you, but I need you to match that new customer rate. Now, the most important part, Be quiet, let them respond. The first person you talk to will probably say they can't do it. That's part of their script. Politely ask to speak to the retention department. Their entire job is to keep you from leaving. State your case again. They might not match it perfectly, but you will be stunned at how often they can suddenly find a special discount for a valued customer who has one foot out the door. If they won't budge, you have to be ready to walk. Say, "Thank you for your time. I'll be switching my service to a competitor name who has already offered me that rate." And then you actually do it. The temporary hassle of switching is nothing compared to the thousands you'll save year after year. This isn't about being disloyal. It's about being smart. It's about recognizing that in personal finance, you are your own best advocate. These companies aren't your family. They are for-profit businesses, and their number one loyalty is to their shareholders, not to you. So make a commitment to yourself today. Stop paying the loyalty tax. Take 1 hour this month and do your own audit. Drop a comment below and let me know what you find. What's the biggest loyalty tax you're paying? Sharing your story could be the spark that helps someone else take action. Adopt a mercenary mindset for these services. Your business is valuable. It's a prize that should be constantly re-earned, not taken for granted. By reviewing your accounts every year and showing you're willing to switch, you force these companies to compete for you. You force them to earn your loyalty, not just assume it. Do the audit, make the call, and go get back the money that is rightfully yours.